Trend lines are basically one of the most important components of the market that you need to learn in case you want to understand market structure. So regardless of which trading strategy you are willing to trade out there, be it ICT, smart money concept, price action, it doesn't really matter. Without the knowledge of trend lines, you are actually going to make a lot of mistakes. Now I see a lot of people out there bashing trend lines, saying trend lines are this, trend lines are that, and the truth is that what trend lines are one of the most important components of the market that you still need to learn. You necessarily don't have to trade trend line like the way they are being traded generically, but having the knowledge of trend line can actually help you come up with better trading ideas. And in this particular video, I'm going to share with you how you can actually couple trend lines with supply and demand to be able to get good quality trade as a total beginner. Now before we get on to any important part of the video, let's answer one of the most important questions, which is what exactly does a trend line actually represent when you draw it in the market? Now for those of you who don't know what a trend line represents, now here is it. A trend line is actually the visual representation of the market momentum and an angle of the trend. So basically trend line just tells you that okay, this market is going upward, and in the process of going upward, this is the format in which the market is actually moving. So which basically means that what trend line just gives you the visual representation of the market structure, but then also gives you the angular perspective of which angle the market is actually moving at. That's why when it comes to trading, no knowledge is actually wasted. Every single thing is needed. So now before we get onto the main chart and I start showing you how to do this practically, first of all, let's understand the 4 important rules of actually drawing a trend line. Now these are very important, and this is the reason why a lot of you draw trend lines but they end up not actually working. So if you are really interested in taking trend lines to the next level, then here are the 4 important rules that you need to have at the back of your mind as a trader. Now rule number 1 is basically you need at least 2 points to validate a trend line, but 3 actually confirms it. Now this actually means for you to draw a trend line, you need at least 2 points touching the line like this. As you can see in this situation, you have point 1 here, point 2 here. This actually shows a valid trend line. So the rule number 1 is simply make sure you have 2 points touching, but having 3 actually makes it the best. Like in this situation, you could skip the first one and then make sure that you have these 3 here. So 3 touches is best, but 2 points actually validates that out. Okay, you can now look for a continuous trend happening in that direction. Now the rule number 2 is basically when drawing your trend line, connect the candle bodies and not the wicks. Now for those of you who don't know what a wick is basically the tiny part of the candle. As you can see, this tiny part here is known as the wick. So when drawing a trend line, you are not supposed to draw it through these wicks like this, but you are supposed to take it from the candle body. So here is the body of this candle, and make sure that what you adjust it to the bodies. The reason is that what the bodies carry momentum and the wicks just have basic spike with no real opportunities to be spotted around there. So basically this means that when you are drawing your trend line, make sure that what you are marking it with the candle body and not the wicks. You can freely cut through the wick but never cut through a body. The point number 3 here is basically don't force the line. Now this is where a lot of people actually make mistake when it comes to drawing trend line. A lot of traders tend to actually force the line just to make sure that what they are getting more attention. Now take a look at this situation here. You see here we have 1 touch here and another touch here, which means that we only have 2 touches on the line exactly. Now what most traders do is simply they will find every possible means to make sure that what they force this line to touch here just to cut through this body in order to have 3 valid touches. Also might even take it from here, which is this lower part here, and find every possible means to force it through this area to make sure that what they have 3 touches. So one of the most important rules of actually identifying a good trend line opportunity is basically making sure that what it doesn't cut through the body, and also make sure you don't force it. And the 4th rule is simply the steeper the line, the less reliable it is. Now what do I mean by a steeper line? Now a steeper line is basically a line that is almost straight. When we say steeper line, we're referring to a line that is almost straight, which means that what the straighter the trend line gets, probably up to the top like this, the less reliable it is, because trend rarely moves in this sort of momentum consistently. So whenever you are drawing a trend line, make sure your trend line doesn't go at up to maybe 70 to 80 degrees. No, make sure that what your trend line is angled around 30 degrees to 45 degrees maximum. Anything above that looks less reliable. So make sure that what your trend lines are not really that straight going to the top. They should go to the side with a bit of curve, more like you're trying to arrange a triangular edge. So guys, before we proceed, let's give a big shout out to our today's sponsor, lightfinance.org. Light Finance is one of the best trading platforms out there, boasting over 4.3 rating on Trustpilot, which means that they are highly positive and users have positive view of them. And they offer one of the best and easiest trading platforms out there as well. So basically, when you come over here, you have access to MetaTrader 4 and 5, CTrader, so forth and so on. And they offer some of the best spread, which is as little as 0.0 spread for some trading pairs, and also has the fastest execution when it comes to trading. On top of that, they offer over 600 trading pairs ranging from forex, stock, commodities, cryptos, and so forth and so on. And to top it all up, it's even advisable for non-good traders to actually use, as they offer copy trading, which is a way for you to actually make profit without having to know how to trade. All you basically have to do is simply copy already profitable trade on their platform from other profitable traders, and you can basically be making profit autopilot. Now we are down to the final section. Now in this section, we'll talk about there are two ways to actually trade in a trend line. Now the first one is basically the bounce method. The second one is the break and retest method. Now at the end of the video, I'm going to show you my own favorite method of trading a trend line as well. So if you stay to the very end, then you might actually enjoy it. So now let's get down. Let me explain the first two basic ways of actually trading a trend line before I review my favorite method to you. So right now you can see that we are on this chart, which is US 30 on the 1 hour time frame. So on this US 30 time frame, we can clearly see that we can draw a trend line from here. You see, we can draw this trend line from this point through this point, as you can see right here. So this is a good trend line. Now on this trend line right now, what do we have? We have two successful touches, touch 1, touch 2 right here, and you can see that the line is not too vertical. It's a bit slanted to the downside, and we can even adjust it to touch the body instead of the wicks. So now we have a good trend line here right now. Now this trend line currently have just 2 touches. On average, it's very best for you to make sure that your trend line have 3 touches for you to be able to trust it. But in this situation, we already have 2 touches, which is also not bad. Now the first method of trading a trend line is basically the bounce method. Now the bounce method basically means that after this trend line has gotten these 2 touches, you are waiting for the next candle to actually, you are waiting for the market to actually trade into it like this, and give you a close like this. So once the trend line the market comes here, gives you a bullish close, then you take your buy at the top of this market. So basically you take your buy right from here with your stop loss below the trend line like this, and then you'll take profit at the very top. Now this is known as the bounce method. The market retraces back to the trend line, it gives you a close to confirm to the direction that you are trading to, then you buy it immediately if it's in an uptrend like this, and then you keep your sell below it. Now the entry confirmation you use at this point is very important, and in case you are wondering which sort of entry confirmation, which sort of candlestick pattern you should look out for before you take this entry, then you need to watch my video that will be tagged in this description. Now in case you don't find the video, just comment candlestick pattern video, and I'm going to give you a link to that candlestick pattern video. There I have shared so many candlestick patterns that you can actually use to execute trade and execute it correctly. Now I've made a video, the link will be down in the video description. In case you don't find it, just drop it in the comment section, and I'm going to give you a direct link to the video. Now this is the first method. Now the second method is simply the break and retest. Now the break and retest is simple. Now you can see that for this situation we have a trend line moving to the upside. Now one thing you can do is simply you can also mark out this high of the market like this. Now when you also mark the high of the market like this, you basically wait for the market to break out of this highest point that you created during the trend movement. Now once you break out of here, you wait for the market to trade back into this level as usual, but then this time around you are not going to trade it from this level. You wait for the market to trade into this level, wait for it to go a bit upward, and then once it comes back to retest this high, which is this high that you created here, then you are going to take your trade at this high, which gives you a better room to keep your stop loss. Now with the earlier setup, the market comes back to test this line, and then you keep your stop loss right here and then take your entry. But with this method, we don't do this. We are waiting for the market to actually come back, tap here, and then go back a bit upward, and then we mark this high here, wait for the market to maybe dance around a little bit, retest this high, then we take the trade at the top of this high, which gives us the room to keep our stop loss below the new high here, because around this place whereby the high is being formed, the market is eventually going to create what we call the order block, or probably a demand session, which will give you a better buying opportunity. Now this is the second method to actually trading a trend line. Now this is for uptrend. Now in a case whereby the market is an uptrend like this and then it switches to a downtrend, maybe the market was buying upward and then it broke down to the downside, probably from here. Maybe after these two touches the market went, and then from here it came back down and broke out of here. Now what you do in this sense is that what you wait for the market to come back and retest the trend line like this, and then you can also take a sell from here. So this is how you take a sell for an uptrend that turns into a downtrend. Now don't worry, we are going to do backtesting. I'm just giving you a practical knowledge on the chart, because backtesting at times you get lucky. Most of the time, I'll tell you the truth that when it comes to backtesting, you can't really even trust backtesting when it comes to the real market. That's why I'm using a real market to show you some good appearance on how you can actually see it. Now you see with this one here, once you wait for the market to break below the trend line, it comes back to retest it, then you can look for a selling opportunity immediately as well. Now these are the two basic ways of actually trading a trend line. Now here is how I personally trade trend lines. Now when it comes to I personally trade trend lines, the first thing I do is simply I come over to the daily time frame. Now the daily time frame, I want to spot the market direction. Now looking at this market on the daily time frame right now, you can see that what on the daily time frame here, the market is retesting this key support level. As you can see here, this is a key daily support level that the market broke below, and then it's coming back to retest. You see why you don't really have to rely just on the lower time frame. Take a look. We'll come over to the 1 hour time frame. You can see that the market is full with what? A bullish momentum. But the moment we drop down to the, you can see this is what it looks like on the hourly time frame. But you are not going to see this back, because most of you are not going to zoom to this point. So basically most of you will see what? You will see this side alone on the daily time frame, and you conclude that the market is a buying opportunity. Some of you might even force the buys from this level here. This is why I always advise that what when you are doing your analytics, always keep your eye on the daily time frame. It reveals a lot more than you can actually see. So for this, I know that what the market actually has what we call a key support level here that is retesting. So I'm going to keep this line here on the daily time frame. This will actually give me an idea that what the market has a bit of momentum to actually take from the upside. Now once I have this marked out, then I drop down to the 4 hour time frame. Now here is one thing you need to notice. Now despite the fact that what on the daily time frame the market is giving us this vibe that is testing a key support level, we can't deny the fact that on the 4 hour time frame the market is gradually creating what we call higher highs, and which is basically a bullish market structure. We can't avoid that. Now in case you don't know how to trade market structure, I also have a video about it. Just comment market structure and I'm going to give you that video to actually go and watch. Now we can't deny the fact that the market is also creating an uptrend here, which is also a good sign for us to look for a buying opportunities. Now here is it. Now in case you find yourself at a level whereby the market sits at this sort of level, don't go in immediately. My advice is simply wait for this market to actually break above this high. Make sure that the market breaks above this high, and then force back in before you start looking for buying opportunity. If the market doesn't do this, then be very careful of every single buys you try taking, because if the market reverses from here, there's no doubt that it can choose to go way lower and even lower than you could expect. So my advice is simply, once you see a market like that is dancing around a daily key level, wait for the market to break that daily key level before you look for any trading opportunity. Now but still, let's continue with my approach. Now my approach is simple. Once I have this, I see that the daily time frame is at a key level, but the 1 hour time frame and the 4 hour time frame are trading upward. I don't really care anymore. I'll come back to my 1 hour time frame, which is where I identify my levels. Now since the 1 hour and 4 hour are bullish, I'm very much okay. I'm a day trader. So next thing is simply I will identify my trend. I'll mark out my trend line. So here is my trend line right here. You can see here is my trend line. I have the trend line right here. Now once I have the trend line, the next thing I do is simply I identify supply and demand levels. Now we can clearly see that before the market actually started this upward trend, the first thing it did is that it sweep out this high here. So let me just mark it out for you. Let me get this and then mark out this for you. So the market created what we call a market shift right here. So let me mark that as a market shift. Now in the mission to create this market shift, the market created what we call a demand right here. Now you can see that what here is a demand or an order block, how you want to classify it. I always take all of them as demand or supply. So here I basically have my demand level right here. Now when I sit right here, I can patiently wait for this market to come back and then test here before I'm actually going to take my buying position. And now in this situation, we can see that after the market created this here, the market has actually gone ahead to take out this high again. So the market has actually taken out this new high created, thereby creating what we call a break of structure. Now since it has created a break of structure, if you zoom in into this particular part, you can see that what the market created another heavy bullish movement from here, which is the leg that created the break of structure. So here is another demand level we can look at. So instead of me waiting for the market to retest the trend line for me to actually take my buying position or my selling position, what I personally do is simply I wait for the market to come back and retest these demand levels that it has created. Now the truth is that there's a higher chance of the demand levels holding than the normal trend lines. Now don't get me wrong, the normal trend lines actually works. Like I know a trader at Tori Trades, she trades strictly the trend line test, but for me, based on my back testing data, I prefer going with the demand levels or the supply levels that the market created depending on the market condition. This actually gives me a better outlook of the market. So once I have this like this on the 1 hour time frame, what I basically wait for is simply I wait for this market to trade way back down here. Once it gives me this confirmation here, so from here I'm going to wait for the market to break here and then retraces back here. Now once it retraces back here, then I'm going to take my buy and I probably keep my stop loss here. My stop loss right behind the level. You see that this one gives you a better level to place your stop loss than just taking it from the trend line. Now from here you can take your take profit to this high again. Now you see you have a better and more solid trade than just using the trend line as your entry mark. So for me, the trend line comes here as a way to validate that the market is going to my direction that I want to trade. But then I don't really trust the trend line enough to actually take my positions from the trend line. So I wait for the trend line to be broken and then my level be retested. This actually gives me a better look and a more suitable entry for me. So now once this market comes and retests here, then I drop down to the 15-minute time frame. And on the 15-minute time frame, I wait for a 15-minute market shift. Now here's what I mean by a 15-minute market shift. So let me go down to my level on the 15-minute time frame. So for example, this is the level I want to trade from. Now I wait for the market to trade into it like this. So let me use this. The market comes into it. I don't go in immediately. I wait for the market to trade outside. Now once the market trades outside, I wait for the market to push back. Then I wait for the market to take out this new 15-minute high that he created. Now once you take out this high, one thing I do is simply I can spot another demand level right behind here. Now once I spot this demand level, the moment the market retraces back here to this demand level, then I'm going to take my entry. Now this one requires a lot of patience, but then it gives you a smaller stop loss position. Now with this, I use the 15 minutes demand level, and then I can just target my 1:6, as simple as this. But if you don't want this as well, you can also go with this 1 hour level. Now on the 1 hour level, you wait for the market to test it on the 1 hour time frame, then drop down to the 15-minute time frame and wait for an engulfing candlestick or any of the candlestick pattern that I shared in my previous video. Then you can just take your entry as well. For me, I just love filtering my trade to the lowest possible system, so I will just wait for this 15-minute structure to play out. Then I'm going to take my trade on the 15-minute time frame. So guys, this is every single thing you actually need to trade prop firms. To actually trade trend line more profitably. Instead of going with a generic method, you basically go with this method, which is what I personally advise. And this issue also gives me a more comforting, I would say a much better trade than any other system that I have personally used before. So guys, with this said, and without taking much of your time, we are already done with the video. Hope you find this video helpful. Don't forget to trade with Light Finance, my recommended broker, and also Blueberry Funded, my recommended prop firm. Links to both will be down in the video description and also in the pinned comment as well. Now if you are a newbie trader, look for trading communities to join. Well, I have a Telegram community that is 100% free. The link is available in the video description also. So guys, see you in my next video. Bye.